Good morning and welcome to today's stock market update for Thursday, December 16th. Yesterday was the big day, the most important Fed meeting of the year. The Fed has spoken and it is not good, but stocks jumped regardless of the bad news. So we'll talk about this today of why that is and what we can expect for the next few days and the next few weeks. We also have news from Accenture, Delta Airlines, and Rivian. And we will talk about the real problem right now and much more. Anyhow, if this is your first time here, I'm Marcus Heitkotter. I'm a professional trader, and every morning we sift through a mountain of news websites, newsletters, and reports, and then we take the most important news and go live right here to share with you what you need to know as we head into your trading day. If this is your first time here, I know it can be overwhelming, so don't worry. We have a special video just for you that I'll link to in the description, and that's a great place to get started. Now, joining me is my head coach, Mark Ott. Good morning, Mark.
Good morning, Marcus.
All right. Now, Mark has more than 24 years of trading experience, and together we have helped thousands of regular people understand how to trade these crazy markets and actually make money, way beyond what your typical financial advisor would do. So, Mark, let's talk about what the heck happened yesterday. The Fed meeting, and the Fed came out, and it wasn't good what they said, right?
What a day. What a day. So, I try to stay away from these terms because I don't think that they are easy for many new traders to understand. Like, what the heck is dovish and what the heck is hawkish, right? But we might as well bring them up. So, dovish is when the Fed is preferring lower rates to promote economic growth and job creation. And that's when they're really, protecting and they want to make sure that rates are low and that the monetary policy allows for growth. And then you have hawkish, right? And I guess it is a little bit descriptive, where a hawk is controlling, and this is where the focus is on inflation or tightening monetary policy. And you could say that yesterday the Fed went hawkish, or they turned hawkish, because they did announce that they are going to be winding down their asset purchases and that it will speed up at a faster pace as inflation rises. And they also pointed to interest rate hikes next year.
Yeah. Now, it was not surprising that they said, okay, we're unwinding the bond buying stuff way faster than we originally planned. And I mean, they doubled the pace. So, I mean, that's pretty good. But then I think the big news was that they said, you know what? I think we're going to do 3 rate hikes next year. And this was kind of unexpected. And we've been looking at this tool here a few times, the CME Fed Watch tool, of what traders are expecting. And look at this. Now they even expect there's a slight possibility that they are raising rates in January. I don't think that's going to happen. But if you look at March, we now have almost a 50-50 probability here that traders are factoring in that they are raising rates as high as March. And we looked at this tool just a few days ago, and there was nothing. There was a 0% for January, a 0% for March. And then in May, this is where it started to look like 50-50, and it was just tipping. And right now we see, oh, no. I mean, traders are already thinking that in May, they could actually already have the second rate hike. So this is the news here, really. And usually when we see a rate hike like this is when we should see the NASDAQ actually diving down, because higher interest rates are not good for tech stocks and growth stocks. But the NASDAQ rallied more than 2% yesterday.
Yeah, I mean, higher interest rates in general, traders don't like, because you could have a shift out of equities into interest-bearing investments. But when it comes to the interest rates in the Nasdaq, absolutely, you would think that is absolutely bad. And yesterday, traders said, "Hey, let's buy," right? I mean, it was a little bit of a shock, at least to that extent. There is the sense of or sigh of relief when news has been released, right? Because uncertainty is what traders do not like. And so once the Fed made their statement, once there was the press conference, it was kind of like, okay, this is out of the way. And I could see some buying, but I did not expect the type of buying that we had yesterday. How about you, Marcus?
Yeah, no, not at all, not at all. I mean, this is, I think, a sigh of relief. It seems that traders were actually thinking that the Fed would react even stronger. The hawkishness here, and this, I guess, yesterday it was, I mean, a twofold reaction. First of all, as you said, a sigh of relief, like, okay, they're taking it seriously, but they're not overreacting. And then, secondly, markets don't like uncertainty. And now we do have certainty. We know what they will do. It's not good, right? But I mean, at least we know what's happening, and traders and investors can adjust to this. And I think there's one more important thing that Powell said yesterday. I just want to find it here because this is where he acknowledged that the new COVID variant, the Omicron variant, is a threat to the economic recovery that could alter the policy moving forward. And this is exactly what traders were looking for. They wanted to know that the Fed still has some flexibility, that they are not only focused on inflation right now, but that they still keep an eye on the economy and also on jobs. And talking about jobs, I mean, this morning we had unemployment claims being released, and they came in slightly worse than expected.
I saw that last week, 206,000 Americans filed for unemployment for the first time, and that was higher than the 196 that was expected, higher than the pre-pandemic or the post-pandemic low that was recently established. That's a bit of a surprise. In my opinion, this really would be a minor report at this point in time after the Fed, but it looks like there was a little movement, a little reaction in the futures.
Yeah, if you look at the futures market, so we're looking at a 5-minute chart of the mini S&P, and it's pulling back. I mean, if you look at what happened overnight, we see that overnight it was going higher, 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 and right now going into the opening, we are pulling back a little bit. I mean, we're still set to open a half a percentage point higher than we closed yesterday, but yep. Pulling back a little bit in a reaction to this, and I think this was really the good news that the Fed and Powell said, yeah, you know what, we will remain flexible, and this is what traders wanted to hear and wanted to know.
And we might as well just kind of wrap up what the markets did. The S&P closed within 2 points of its record high yesterday.
Yeah, 2 points. So,
And the Nasdaq led the way with a 2.2% gain. So
right.
what a day! What a day!
And I mean, looking at the pre-market action, it's very likely that we see another record high today or tomorrow, and that we'll finish the week on a positive note, even though it looked pretty grim. I mean, yesterday, going into the meeting, all three indices were negative before then finally there was the jump. I mean, we can quickly look here at the 5-minute chart of yesterday, where we saw here is what's happening. Here where the meeting minutes were released right here. And then we had the press conference, and it was just up, and away here. Now,
And you can even take a look.
Yeah, go ahead.
I was going to say you could pull up the VIX too, because the VIX now back below 20.
Yeah,
When we had the first news of the Omicron variant, it spiked, and you had a real big jump, and it was in a range between 20 and 35. So this is the fear index based on S&P 500 options pricing and increased premium when there's fear. Now back below 20.
yeah. And I mean, we talked about it yesterday. This week, 20 central banks will actually decide on interest rates. And so there are a few that traders are paying attention to. And one of them is the ECB, the European Central Bank. And they made a decision. Did you see what happened there?
I did not.
So they made a decision, and they said, okay, we are not raising interest rates. Yes, we're scaling back the bond buying program that they are doing, the stimulus, but we are not raising interest rates yet. But the Bank of England, they came out with a surprise, and they said, you know what? We're going to raise interest rates. So the Bank of England raised interest rates in a surprise move. So this was super, super surprising. But it seems that right now it doesn't really shock the markets. I mean, especially if we keep looking at what is the Nasdaq doing. going into the open here. Again, slightly pulling back, but still higher than we closed yesterday. But it's definitely a few factors here that that traders are analyzing today as we head into the trading day.
Absolutely. So, did you see that Rivian is set to report first quarterly results, the first earnings since going public?
Yeah, and so this will be today after the bell, and it will be interesting because I mean Rivian was flying high, then coming all the way back. But other than other IPOs, they are still trading above their opening price here. And if you look at some others like Coinbase, when they first started trading in the first few weeks, they were plummeting down. If you look at Hood, I mean same here, they are trading well below their opening price. So with Rivian, they're hanging in there, and it will definitely be interesting to see today's report, earnings report.
Agreed. And then Delta Airlines, they reported what was previously projected as a loss. They reported a profit of 200 million in the fourth quarter, so they're up a little bit pre-market.
Yeah, and this is a little bit outside because they were not supposed to report earnings, but they released it because they're so proud and they say, "Hey, well, and with the profit," because I mean we know that the travel industry, the airlines here have been hit hard and have been loss after loss after loss, and now for the first time in I don't know how many quarters, could be 4 6 quarters or something like this, ever since the pandemic happened, finally saying, "Hey, we'll come out with a profit." I think a little bit premature because the fourth quarter is not yet over. We have another 2 weeks, but they seem to be very, very certain about this.
Yeah, they got excited and seeing that holiday travel appears to be picking up, and I think especially after the Omicron uncertainty, they just wanted to get that out there.
Yeah, yeah. All right, then we had Accenture. Accenture actually they did report earnings and they are up this morning. You can almost not see it. They're way up here this morning, so up almost 10%, which for
Wow.
Accenture is a huge move. I mean, that's a stock that's typically not moving that much.
And I mean, they just crushed it. Better than expected profit, better than expected revenue, and then the key that we really want to see, raising its earnings guidance for fiscal 2022. So, looking to do better in the next year.
All right. Then we have Lennar Homes reporting earnings and different story here. So they're down 4.7% in pre-market trading.
Yeah, they came in at 391 a share, which was below the 415 expectation. Home builder or the revenue was also below forecast. The company said that they were hurt by higher lumber costs as well as increased labor costs and shortages of raw materials, resulting in delayed home deliveries, Marcus. And I think the shortage of raw materials is something that is going to, potentially creep into the new year. And with that said, did you see about the cream cheese
Oh my gosh.
shortage?
That is the real problem in the markets right now. So let's see if there's an easy way to close this huge, massive banner ad. No, it is not. But here, yeah, the headline on CNN Business: Kraft will pay you $20 not to make a cheesecake for Christmas. So what's happening there?
I guess that they just spun it into a perfect marketing campaign where they're going to be paying some people 20 to not make cheesecake and to buy another dessert. But with shortages, I guess they're worried about cream cheese being in the supermarkets for the holidays.
Yeah, I mean, a few people, up to 18,000 people. So yeah, if
That's
you're
a good
planning
number.
if you're planning anything with cream cheese, I mean, go to the store right now and stock up on cream cheese. It's a real shortage. Okay, anyhow, we got to get ready for trading. This will be an interesting market. And if you would like to know how we trade these markets, I'll link to a few videos right here. Also, make sure to subscribe to this channel so that you don't miss a video, because this afternoon I'll be live with Coffee with Marcus. I'll see you then.
Happy trading, everybody.